Friends of the media, thank you for coming to the press conference today. In a moment, the Chief Executive will give you a briefing and then to take questions from the floor. Now, I will first invite the Chief Executive to speak. Friends of the media, members of the public, today, together with a number of principal officials, I'm here to brief you on the measures to fight the virus together and so we can tide over the challenge together. Now, today, the Executive Council called a special meeting. The Executive Council gave full support to the government to put in place a package of relief measures as soon as possible. Now, the COVID-19 has brought about unprecedented challenge to Hong Kong. A wide range of economic activities have been seriously disrupted. In fact, some such activities have come to a complete halt. These are the so-called hard-hit sectors, such as the aviation sector and the tourism sector. And because we have to fight the virus together, we have put in place many social distancing measures, and that's led to a plunge in business across a wide spectrum of sectors. And thirdly, we are going to see, unfortunately, a wave of businesses closing down, and there's expectation of massive layoffs. So many families and individuals will be plunged into hardship. Well, that's just our expectation. The latest unemployment rate is 3.7%, and we have warned many times that this unemployment rate is going to surge. That's why we need to do our very best to prevent the expected business shutdowns and massive staff layoffs. Now, this is an unprecedented challenge that we face, so the SAR government must also give an unprecedented response. It is for several purposes. Firstly, we want to help businesses stay afloat. Secondly, we want to retain jobs for workers. Thirdly, we want to relieve the financial burdens of the individuals and businesses. Fourthly, it's hoped that after the epidemic comes under control, the economy will rebound as soon as possible. Now, for this package of relief measures, it's on top of the $120 billion relief package announced in the 2020-21 budget, and also the $30 billion anti-epidemic fund approved by the Legislative Council on the 21st of February this year. So as we look at the measures today, please do bear in mind that in a short space of time, this is the third round of relief measures we're rolling out. In designing the package of measures today, we reminded ourselves that at this stage there is need for a decisive and prompt response, and then we need to take bold measures as well. These measures should, fit certain criteria. First, they must be simple to understand. Secondly, these measures must be easily accessible. That means we don't want businesses or individuals to have to go through cumbersome vetting procedure. And thirdly, because this is immediately relief, so the funds must be able to be dispersed quickly. And fourthly, as I mentioned just now, in fact, a wide spectrum of sectors have been hit, so we want the measures to be broad-based. We won't just select certain sectors to give them assistance. But at the same time, we need to give extra relief to hard-hit sectors. And finally, we want these measures to pave the way for economic recovery in the future. Now, there are four major components in the package of measures. The first one is the most important: job retention, job creation, and job advancement. The second component is sector-specific relief. The third component is government rental concessions, fee waivers, and loans or deferral of loans to help individuals and businesses to lessen their financial burden. And fourth component is other relief through government facilitation. Now, I'll first talk about the first component in the package, that is retaining jobs. The government is going to introduce an $80 billion employment support scheme. It is unprecedented. The government will provide wage subsidies to eligible employers so they're able to keep their employees. But employers must undertake that as they receive wage subsidies, they would not make staff redundant. For all employers making MPF contributions will be eligible under the scheme. But then there are certain employers on the exclusion list and they are not eligible. And in other words, these are the employers who have not been much affected by the epidemic, or if I put it more bluntly, many of them are actually paid by the Hong Kong state government. That includes the government itself, statutory bodies, and Hong Kong and government-subvented organizations. The subsidy is on the basis of 50% of wages subject to a cap. That is the median wage in the second quarter of 2019. That is $18,000 per month. So that is a cap. That means the maximum wage subsidy is 50% of $18,000 for a period of 6 months. Perhaps if I may explain a bit further here. Now we have this wage cap of $18,000. It doesn't mean that for employees who earn more than $18,000 would not get any subsidy. It's just that the subsidy would be capped at 50% of $18,000. That's all.
To make disbursement of funds easier, while we propose a disbursement period of 6 months, the payment will be given to employers in 2 tranches. We will do our level best because the design is simple. We hope that the first tranche will not be dispersed no later than June 2020, subject to timely applications from employers. We expect that under the scheme, 1.5 million employees with MPF accounts will benefit. We've also noticed that there are a few sectors where the employees have a lower percentage in MPF contributions. Under the MPF system, these sectors are given special treatment. So it's unlikely that these sectors are employing so few workers, and they are catering, construction, and transport sectors. Now, for the transport sector, we mainly talk about drivers of taxis and red minibuses. Now, if he is an employee of a bus company, then he should be covered by MPF. So by transport sector, we're referring to drivers of taxis and red minibuses. Employers in these 3 sectors are not well covered by MPF, so they will be assisted in sector-specific schemes which will be very similar to a subsidy in payroll, and that will be around 800,000 of them. And for self-employed MPF contributors, they will be assisted through a one-off lump sum subsidy. It will be talking about 215,000. These contributors do not have employers, so it is hard to work out how subsidies should be calculated. Now, these are people in the workforce. They have employers and they have MPF contributions. So for the unemployed, it's a bit difficult to cater for them. Many trade unions and have talked about a short-term relief for the unemployed. It is a bit difficult to cater for them. So we've decided to relax the asset cap for those who are applying for CSSA. We are going to multiply the asset limit by 2 so that more people will be eligible, and the relaxation will last for 2 for 6 months. If you're interested to know the details, Dr. Lo Chi Kong can talk about it, because for those living in self-owned premises, for the first 12 months, the assets can be discounted. So I've talked about a massive scheme to support employment. And we are going to create jobs as well. In the coming 2 years, the SL government is going to create 30,000 time-limited jobs in public and private sectors. They will last for about 12 months at worth of $6 billion. And the SL government, being the largest employer, will continue to recruit staff amid the very difficult economic situation. We expect to recruit about 10,000 civil servants in 2020-21 and about 5,000 interns for young people. But for the internship, the time would be shorter. Now we are still vetting this year's budget, and we've only created 6,000 jobs. How come we have to employ so many? Because there will be retirees, and the civil service has reached its peak in terms of wastage through retirement. So taking into account civil servants that are about to retire, we will have about 10,000 vacancies. We hope that these measures can pave the way for economic recovery in the future. So we will spend about $800 million for job advancement projects. We've already identified 6 sectors for employment of new skills and also for enterprises to use new technology. I take Reason a case as an example. Because of the epidemic, our courts have started using video conferencing in trials. So one of our proposal is to assist small and medium-sized law firms or barristers' chambers to set up video conferencing facilities and training in this regard. And then in the first round of anti-epidemic fund, many sectors have said that they are not covered. And we've also introduced social distancing measures. As a result, some businesses have to close down. So in the first round, we have spent $30 billion under the steer of CS4A. On the whole, progress has been smooth, and we want to disperse the funds the earliest possible as promised. And then for the second round of anti-epidemic fund, we propose to spend $21 billion, and we're going to benefit a number of sectors. We're going to give you a paper later. You know sectors covered. For instance, we're going to support tutorial schools, and you'll be able to tell how much each tutorial school can get. And for the financial sector, we will support license holders and also participants of Hong Kong X, so on and so forth. And you'll be able to tell when we have the paper. And now you see the asterisks. Now we have a construction related passenger transport sector and catering outlets, so on and so forth. They will be covered in the employment support scheme. Because of these sectors, we will have to protect their jobs and also give them support, so will they be included in this sector-specific relief. So the amount of money we plan to spend for these 3 sectors will be to the tune of over $100 million to support them. Now the third part is government rental concessions, fee waivers, and loan deferrals. Whatever can be done will be done this time. Now for loans, many enterprises have liquidity problem. They are short of cash, so we will enhance the SME financing guarantee scheme. We'll raise the maximum loan amount per enterprise. We have got 80%, 90%, and 100% guarantee respectively. and the rise in a loan. Now, for 80% guarantee, the amount will be raised from 15 million to 80 million. For 90% guarantee, from $6 million to $8 million. And 100% guarantee is the latest round of measure and will be launched later this month. It will be raised from $2 million to $4 million. Now, only 100% guarantee can enjoy premium concessionary interest. Now, we propose that even for 80%, 9% guarantees, they will be given a concessionary interest rate at no more than 3%. Another scheme will also extend the application period and we will relax it to ensure that publicly listed company will be eligible to apply. Because the special 100% guarantee product is well received by the sector, even though it has yet to be formally launched, we have received a very enthusiastic response from the sector. They have the view that the scheme can give them timely help. So we apply to the LegCo to raise the commitment of $20 billion, already approved by the Council, to $50 billion to meet businesses' demand. In total, the three schemes will be giving government guarantee commitment of $183 billion. Of course, much of the amount has been approved previously. It's just for your reference that we have a large amount of commitment ready to be loaned to enterprises in need. Now we have a lot of concessions. I'll go on.
So I'll go through them quickly. Now, in the financial secretary's relief package, we've already rolled out rental concessions, and now we are going to increase the concessions from 50% to 75%. As for short-term tenancies or waivers for land rented from the Lands Department, again, the concessions will be increased from 50% to 75%. And then we will expand the scope. Before, some of the tenants and business were not covered. Now they would be covered under the expanded scope. And also, the fifth one is that there's already waiver of water and switch charges, but we're going to extend it for another 4 months. In other words, for all non-domestic accounts, there will be a total of 12 months of waiver continuously. And sixthly, we want to show our appreciation and recognition for healthcare workers. So in the next 3 years, we're going to waive the registration or enrollment fees for healthcare professionals. And seventh measure, now as our economy begins to recover, many people will probably be taking public transport again. So we will propose to the MTRCL to reduce fares starting from the 1st of July this year. MTR fares will be reduced by 20%. Half of the foregone revenue will be covered by the government. The eighth measure, that is our public transport fare subsidy scheme. We propose to relax the monthly threshold from $400 to $200 starting from July this year. Now, in the past, we've been giving support to the development of self-financing post-secondary institutions and non-profit-making international schools. The government has been giving them interest-free grants, and now we propose to defer the loan repayment for 2 years for the interest-free grant. And 10th measure, for student loan repayees, there are about 200,000 of them. Now, apart from those on default, we will grant an automatic interest-free deferral of loan repayment for 2 years. There is no need to make applications. The 11th measure also, there's no need to make application. Now, for April, May, and June, salaries tax, profits tax, and so on are due, and there will be an automatic deferral of 3 months. And then the fourth component are relief measures facilitated by the government. As I said, the aviation sector is a hard-hit sector. apart from the relief measures, the aviation businesses could apply under the employment support scheme, and on top of that, the airport authority and has agreed to offer additional relief worth $2 billion to airlines and its immediate supporting operators. The Hong Kong Monetary Authority has also been rolling out various measures to, so they have adjusted the regulatory parameters to allow banks to lend out more. And after many rounds of such operations, there is a total lending capacity of $1,000 billion released, and then principal moratorium is provided to clients. And then for specific sectors, there are also certain measures rolled out. The whole purpose is that these businesses could then have access to the much needed cash flow or liquidity. And then the insurance authority is also facilitating various insurance companies to offer grace period of premium payments for their clients. So for people who have life, critical illness, or medical policy coverage, they won't need to pay a premium for a specified period, but it doesn't mean that they are on default of payment, so their policies will not be affected. And then a fourth measure here is that the government has many contracts, and usually under the contracts there will be a deadline for certain work to be completed, and then we will pay. Now, because of the social distancing measures, many such work could not be carried out as scheduled. That's why we have issued notice to all government bureau and departments to extend the deadline for project completion and or relax the payment schedules of government work and non-works contracts. And that they should also extend the building covenant period by up to 6 months in land leases. Finally, let me talk about the overall fiscal implications. The total cost of the package amounts to $137.5 billion, comprising additional expenditure of $109 billion to the anti-epidemic fund, $11.7 billion to the loan guarantee scheme, and $3.2 billion to the CSSA plus contingency. So the total is $137.5 billion. As for the remaining $1.8 million, that's revenue foregone from rental concessions, fee waivers, loan deferrals in terms of interest foregone. So that's why the total amount is $137.5 billion. And then outside of the $137.5 billion, that's additional commitment of $30 billion for increasing the special 100% guarantee product. Together with the $30 billion under the first round of the anti-epidemic fund and the $120 billion budget measures, in just over a month, the total financial commitment for the government to offer relief to the public amounts to $287.5 billion, which is about 10% of GDP. If we assume that all these measures will be paid for in 2020 to 21, the budget deficit for this financial year would be increased from $139.1 billion originally estimated to $276.6 billion. That is from 4.8% of GDP to 9.6% of GDP. 9.5% of GDP. But of course, for the 9.5% of GDP, and that is the deficit that we're going to have, the fiscal deficit, of course, is a cause for concern. But then this epidemic has brought about catastrophic impact on our economy. That's why I believe the government ought to dig deep into our fiscal reserve accumulated over the years to help our businesses and our people. And it also shows that we are confident that after spending this money, we'll be able to make it back because we have strong fundamentals, and then Hong Kong people are highly resilient. So I have confidence that we could ride out this storm. What we need to do now is to fight the virus together. And I'm sure then we could relaunch Hong Kong together and move forward. To show solidarity with the people, I, myself, and the principal officials, including the Chief Secretary, Financial Secretary, Secretary for Justice, and the 13 Bureau Secretaries, and the Director of the Chief Executive Office, we will all take a 10% pay cut for the coming 12 months. Thank you.
The Financial Secretary will brief you on the macro financial situation, economic situation. Thank you. Friends from the media, good afternoon. The COVID-19 epidemic has dealt a blow to local and global economy, and the impacts even stronger than that when we had the financial turmoil in 2008. Now, overall, the economy is in doldrums, and unemployment rate has risen to a 9-year high. Because of the endemic, the global economy is also in deep recession. No one can tell how long this is going to last. Faced with this very stiff challenge, we need to avoid massive unemployment. Otherwise, that will further dampen demand and lead to a spiral downward or trend of our economy and employment. And therefore, the government must take bold and decisive measures in order to support employment and relieve hardship of the people. The measures announced today, together with the first round of anti-epidemic fund, and also what's in the budget, involves $290 billion, or equivalent to over 9% or close to 10% of our GDP. Compared with advanced economies, and fiscal measures launched by them in view of the endemic, we are very close to what they have done. This will relieve the impact on our GDP by 2%. With the 4 rounds of measures rolled out, and also the first anti-epidemic fund, and also the budgetary measures, and also this round of measures, we are talking about close to $320 billion. It can provide a buffer of 5% to our GDP. You may be concerned about the budget deficit for this year. The CE has just briefed us on that. I estimated that to be $139.1 billion. Together with AEF, a second round, $137.5 billion. And I think our economy is going to contract much worse than expected. This will affect our revenue, tax revenue, and from land sales. So the budget deficit will be worse than expected. That said, because of the unprecedented difficulty we face, the government must plow in sufficient resources to stabilize the economy, support employment, and relieve hardship. We have more than $1 trillion in our fiscal reserves. Although the relief here will reduce our reserves by $800 to $900 billion. Our public finances are by and large safe and stable. We have built up our reserves in good times in order to save for a rainy day, so that when we are in financial hardship, we have the ability to launch massive anti-cyclical measures in order to offset the impact of an economic downturn on people's employment and the hardship caused to people's livelihood. Q&A, please raise your hands, and then we'll pass you the microphone. And before you ask questions, please identify the agency you represent. Mrs. Lam, I'm from TMHK. Now, these measures are not directly for employees, but given to employers. Is it because it is difficult to directly disburse the funds to employees? Will there be loopholes as a result? For instance, can employers just fold up their businesses after getting the money and flee? And you're going to face a pay cut by 10% for 1 year. Is it because of a great dissentiment in society that you've decided to do so? How come many foreign governments have already exercised a pay cut and you're only announcing it today? Is it because we've lagged behind in terms of the political assessment? And the registration fees of healthcare workers will be waived for 3 years. In fact, healthcare workers are not asking for a cut in their expenses. Rather, they want the government to be more aggressive in infection control measures. Can you guarantee that there will not be settling of scores after the epidemic is over? That is about the strike by healthcare workers earlier on. Thank you. In designing the measures to support employment, we accord top priority to supporting jobs. Now we're spending more than $137 billion. According to my assessment, at least 70% will be spent on employees, because most of the $80 billion will be for employees. And in the three sectors, much of the money spent will be for supporting jobs for employees. So undoubtedly, we are according top priority to keeping jobs for the employees. In the past week, I've met many people, trade unions, trade associations, representatives from employers and employees, and they were unanimous in supporting employment for employees. Otherwise, there will be massive layoffs, and redundancies and layoffs can cause a severe shock to society. Now, there is a relationship between employers and employees. So subsidy to salaries will be dispersed to employers subject to some regulations that is most direct and expeditious. You ask whether it is difficult to identify employees to pay them the relief. Yes, it is indeed difficult to identify millions of employees. So the wage subsidy will be based on MPF contributions. For employers to be eligible, they have to promise there will be no redundancy. I hope that starting from today, there will be no layoffs. I hope they won't stop from so doing on the day of application. Now, if we find out that there's been redundancy, then the money will be recovered with a surcharge. And all the wage subsidy given by the government to them must be spent on staff costs. It cannot be used on rent. And the whole system is very transparent. Employers who come to apply under ESS will be disclosed so that employees will know that their employers have already apply for support under the ESS. If these employers do not do accordingly, I'm sure employees will take action. And we're very active trade unions in Hong Kong. I'm sure they will help to ensure justice is done for employees. Given the difficult period we face, we believe employers will not abuse the money we give to them. We will very stringently audit and follow up. However, money has to be dispersed first to ensure that employers have much needed cash to keep jobs first. And the second issue is about a pay cut. Myself and my team has proposed, given that this is such a comprehensive package, it is impossible that it was only devised overnight. Now, because in the last few days, because of a special FC, there was a discussion, but it's impossible that we only thought about that after that discussion arises. So this is not just an ad hoc item we add in, because we want to show our sincerity to ride out the storm together with the community. And therefore, I have to exempt all organizations paid by the government. In fact, many staff that are involved in the fight against the epidemic are working very hard, but then our jobs are protected, we're stable, we have wage protection. Because the situation is so dire, I'm of the view that the governing team should show our commitment to share the burden of the community, and that's why we have this proposal. So it is not in response to the political situation or because it was proposed by a certain person in the community. So over 100,000 healthcare professionals will see their registration fee waived. We'll only talk about a few hundred or a few $1,000s per year, but I hope it can show our recognition and gratitude to healthcare workers that have worked so hard recently. Today in Special FC, Dr. Kopat Singh already made it very clear that it is a matter between the hospital authority, which is the employer of these healthcare workers. I am not the employer of healthcare professionals, and I heard from Dr. Tony Ko that they will handle the situation based on their code of employment and also according to law.
To the right, the last row, the one in gray, please. Yes, I'm from Commercial Radio. Now, I see that with this round of measures, the fiscal deficit will be 9.5% of GDP. Are you concerned about our credit rating being affected? And what about the fiscal reserve level? How many months of government expenditure would that be? And then some suggested the government should issue bonds, so is that feasible? Second question about job retention measures. Are you worried that businesses would first lay off staff before they apply under the employment support scheme, so then the scheme would be less effective? And third question is about taking pay cut for government officials. What about EXCO members? Would they also follow suit? And 10% and 1 year, how do you decide on that? I'll take the last two questions first. First of all, we're proposing that we will ride out the storm together with the public. Principal officials are those that I have mentioned. We cannot impose this measure on EXCO members. Now, last time round, we donated 1 month of our salary for charitable purpose. Again, it is our own decision. And then non-official members of EXCO would discuss amongst themselves, and then they make their announcement last time. Now, I don't know if the EXCO members will make an announcement this time. And then second question about job retention measures. There is actually little incentive to lay off staff and then apply for subsidies, but rather they should hire more people, and then they could get more subsidies, because there will be a certain time reference, and then we'll look at the overall salary expenditure, and if the wage does not exceed 50% of the $18,000, that would become the subsidy we give to employers, and then employers could disperse that to their staff. So I don't see the problem you mentioned. Now, for certain businesses, because it's already April, now for certain businesses, maybe they've already laid off staff in an earlier stage of the epidemic. Well, that's already happened. We can't turn the clock back. But I hope that with this wage subsidy, maybe these businesses are able to hire back some of the employees, and that is something we would be happy to see. And then I would now invite the Financial Secretary to talk to you about the fiscal deficit and bond issuance. Thank you, Chief Executive. Now, in the second round of the MP Epidemic Fund, and in addition to that, we have the budget measures and the first round of anti-epidemic funds. Altogether, they amount to about $290 billion. That's close to that's 9.5%, close to 10% of our GDP. So it's just over 9.5%. And then if we look at other advanced economies around the world, the United States, Singapore, the United Kingdom, Australia, and so on, their measures amount to a similar percentage, and Malaysia too, the percentage is similar. So you can see, therefore, because this is an unprecedented challenge internationally, so all governments need to respond decisively and promptly. And I've talked to certain credit rating agencies. They asked about it. Now, they read from the news that we have the first round of anti-epidemic fund. They studied those measures, and then the agencies asked whether we would be rolling out further measures. No, actually, for credit rating agencies, they agree that given the current circumstances, we want to avoid spiraling downward of the economy. We want to avoid a massive unemployment, so these are necessary measures. And then will we consider to issue bonds? Well, you might recall the policy objectives for bond issuance for the government. First, it's for developing a certain market, for example, the silver bond or the green bonds. And secondly, this could be bonds for supporting public works, say for building roads and bridges. So therefore, when we want to issue bonds, we have to make it clear to the market why we're issuing the bond. Now, in the coming year, yes, we will have a huge fiscal deficit. After we discount the fiscal deficit, we will still have a fiscal reserve of about $800 to $900 billion. That's equivalent to 14 to 15 months of government expenditure. So that's why our fiscal position remains sound. Now, let's say if we want to issue bonds for paying for the anti-epidemic effort, people may question why we need to issue bonds. Are we going to relax on our fiscal discipline? So that's why we believe this is actually not the right time to change our usual practices. But of course, say in future there are good projects, there are worthy infrastructure investment, then if we want to take forward those projects, then we could consider whether we would issue bonds. In fact, in the budget, there's mention of the green bond. This year and in the next 4 years, in total, we're going to issue several tens of $billions of green bond.
This gentleman on the far left, please.
Thank you, Mrs. Lam. Richard from RTHK. Firstly, on the 50% level for the salaries, can you explain how you and your team came up with that figure when we're looking at like the UK and Singapore, perhaps maybe offering a slightly higher percentage? Secondly, can you just speak a little bit about sort of what guarantees there are that the money which you're going to be giving to employers will actually trickle down to employees and make sure that they aren't missing out on this relief? And thirdly, rent is a big overhead for companies, obviously. Obviously, that's a bit outside your ambit, but will you be making appeals to the private sector to offer relief as well?
Thank you very much, Richard, for the 3 questions. Well, first of all, of course, in designing the employment support scheme, let's call it the ESS, we have to ensure that the money that we are providing is reasonable to enable the employers to keep the employees in the job. If we provide too small an amount, the employer will continue to have difficulty in keeping that employee in the job. But if we provide too large an amount, then it's a question of affordability. Now, this package at 50% of wage cap of $18,000 already costs $80 billion. So I would say that 50% is about right percentage. You mentioned the UK and the Singapore schemes. I may as well give you this comparison, because in designing the scheme, we have looked at the UK, Singapore, Australia schemes. Yes, the UK scheme seems to suggest an 80% of wage subsidy. But if you look at the details of the UK scheme, it's only available to what they call furloughed employees, that is, employees on leave. In other words, they are more or less being laid off. They are on leave. They are not supposed to come back to work. And under those circumstances, then their wages could attract 80% subsidy. In our case, we very much welcome the assisted employees to stay in their job so that they will get not only our subsidy, but they will continue to get some pay from the employers. And this is also a much more, in my view, a healthier development, because we want the staff to be engaged in work so that when the epidemic situation stabilizes, then there will be more business. Okay? So it's not entirely the same comparison. As far as the Singapore scheme, they actually have a three-tiered subsidy of 25%, 50%, and 75%. 25% is made available to all sectors, except those who are given 50 and 75%. 50% is given to the hard-hit sector, I think is in the catering industry, whereas 75% are really given to the almost dead sectors like aviation and tourism. Okay. More recently, Deputy Prime Minister Heng Swee Keat has announced, I think 2 days ago, that for the month of April, the Singaporean government will extend the 75% to all sectors because of very aggressive social distancing measures being imposed on almost every sector. But I suppose if the situation stabilizes, they will still adhere to the 25%, 50%, and 75%. But in our case, it's across the board, 50%. So I would describe that our scheme is broad-based, is quite generous in that respect. And also to try to differentiate sectors which are more hard-hit, less hard-hit, is not too easy in the MPF arrangement. But what the Hong Kong SL government has chosen is for those hard-hit areas, we will provide them additional subsidies under the anti-epidemic fund. If you are interested, we can give you an example later on how a travel agency will benefit from both schemes, the ESS scheme and the AEF item. As far as the assurance that the wage subsidy will go to the employees, the first thing is 100% of the wage subsidies provided by the Hong Kong SL government have to be spent on wages. The employer could not deploy the money for other purposes. And we will put in place very robust auditing after the event, because I don't want to have detailed vetting before paying out. The employees and employers are now very short of cash. They need money. But we reserve the power to do auditing in order to ensure that the money is spent on wages. Secondly, is the employers have to promise that there will be no redundancy. And of course, thirdly, we will operate in a very transparent way. So all the employers who have applied and approved to enjoy the ESS, we will tell everybody, particularly the employees. So the employees will know that the employers have received wage subsidies, which are supposed to be for them, not for the employer. And if they don't get it, then I'm sure they will complain, either to us directly or through the trade unions. So there are safeguards all the way to ensure that the money will go to the employees. Now, rent is a very tricky issue. And it is also a very important cost component in doing business in Hong Kong. As far as the Hong Kong SL government is concerned, for tenants occupying our premises or our land on a short-term basis, we are now going deeper to provide a 75% rent concession. As you may remember, I have met with REDA. I have made several public appeals to landlords, particularly big developers, to likewise provide rent concessions to their tenants so as to keep their tenants afloat. Otherwise, the shopping malls will become vacant pretty soon if all these retail restaurants have to close down. I understand and I appreciate that some developers have been doing that and doing the rent concessions in a rather generous way. So sitting here now, I make this further appeal to developers to do exactly that so that we could together not only fighting this virus, but also support Hong Kong. Thank you very much.
Maybe we take a question before we come back to Chinese. The gentleman on the right, please.
Hi, thank you. I'm from the South China Morning Post. A few questions. First is about the distribution of the wage subsidies. It's going to take another 2 months for the citizens to receive the money. So my question is, can this be done earlier? And do you see that before the employees actually get the money, some businesses may have to shut already? The second question is about some other reporters have asked already. How do you ensure that the money actually get to the pocket of the workers? For the violators, will there be any consequences, any punishment? The last question is, how do you calculate how much subsidy will the self-employed people be getting? And just to clarify, am I right that all employees, no matter what businesses they're in, they're qualified for the wage subsidies? You talked about the Singapore model, the three-tier model. Is that something that you would actually consider, that the companies that are more hard hit will be getting a bigger subsidy for the employees, and the companies that are less hard hit will be getting less money for the employees? Thank you.
Let me answer the second question first. First, I said as a principle in designing this package, it has to be sufficiently broad-based because of the degree of severity, almost every sector is being hit, except those who are on the government payroll, to be very honest. But at the same time, we are recognizing sectors which are particularly hard hit, and these are the aviation. The Hong Kong International Airport is almost closed. I was very sad when I read the figures. Yesterday, at the Hong Kong International Airport, this aviation hub for Asia Pacific, we have only 367 arrival passengers. Now that is the severity of the situation faced by over 75,000 employees at the Hong Kong International Airport. So apart from giving the employers at the Hong Kong International Airport access to the wage subsidies under the ESS, we have other measures for the aviation sector, which we can share with you, or you can read it from the detailed notes that we are going to distribute. Oh, by the way, Frank is here. Frank could say something about the additional help for the aviation sector. So we are doing that, but we are doing it in a different way. Instead of juggling with the wage subsidies in terms of the industry, because that would make it very complicated to administer. And that complication in administration will directly go against your first question. Your first question asked me to do it earlier, but by making the ESS so complicated, there's no way I can ensure early payment of subsidies to the employees through the employers. So I hope I've made myself very clear that in designing the scheme, speed is of the essence. I want to pass the money to the employees to keep them in the jobs through the employers as early as possible. So while I said that we are committing ourselves to no later than June, it doesn't mean that if we could do it earlier, we won't. I will look to Dr. C.K. Law and my own team in the Chief Executive's office to try to speed up the process, to review the design and the processing to see whether there's still scope to do it faster in order to hand over the cash subsidies to the employees through the employers. But I do hope that employers who are now watching this press conference or who will read the newspapers tomorrow will bear in mind that money is coming. So don't rush into laying off your staff and hang on as long as possible because money is coming. We are there to share the burden and try to keep companies afloat. If they really have cash flow problem, then there's a loan scheme. I hope the loan scheme is also very efficient, that the banks will distribute the loans upon application early enough to tide over individual companies' difficulties in paying for their employees. I now invite STH to say a few points about the aviation sector.
Thank you, CE. Well, in fact, I would say that most sectors, if not all, the industry are actually very seriously impacted by the pandemic. As for the aviation sector, we have to appreciate, in normal days in the past, we have 200,000 passengers coming in and flying out every day. And for the past week, the number is close to less than 2,000. If you take that as an indicator, the entire airport is down to 1% of its capacity in operation. And therefore, all the airlines, all supporting services companies, retail and dining outlets in the airports are the hardest hit. Of course, we can help them with the employment support scheme by providing, salary subsidy through the company to the working staff. And in addition, we are also offering subsidy or assistance of another kind. Say, for example, the offering to repair and maintenance of the airplane. Say, for example, a big jet will provide them with $1 million. While you may think that the amount is huge, but actually a large plane would require roughly about $60 million to maintain it in a year. So $1 million is just a peanut, I would say. But that's the thing that we try to do and help them as much as we can. And for company with 100 people or more, we are going to offer them $3 million as assistance. And for company with less than 100 people, we are offering them $1 million. But after all these are very minimal, I would say. And we are looking forward to help them in a more ingenious way. For example, the Airport Authority is planning to purchase 500,000 air tickets with a view to provide cash flow to the airlines during this very difficult time, and to save the tickets for future where Hong Kong is going to be launched, to try to attract travelers coming to Hong Kong and people going out for trips when the pandemic is over. And we are also offering a very innovative approach to purchase those supporting facilities in the airport. Because for supporting services company in the airport, they are running out of cash. And the provision of cash flow is very important. And therefore, by purchasing those equipment or hardware from these companies and offer them with the cash flow would be very important. At the same time, this facility will still be used in the airport if there's a need. And by the time when the airport pick up and resume normal, this company would have the right to buy back. And the airport authority is also offering rent-free period so that this company will be relieved for a certain period of time. So we are trying to do whatever we can and trying to help as much as we can. So I think we should not just focus on employment support scheme or just wage subsidy. There are all sorts of ways that we can offer, just like what the Financial Secretary has mentioned about loan and facilities and all other things. Thank you.
Mr. Frank Chan told you about what the airport authority is doing. Perhaps I could say something more. The airport authority would use its resources in an innovative way to increase the cash flow of companies which are struggling. So they will first buy 500,000 tickets from the airliners. This is to prepare Hong Kong for a relaunch in future. And that is in line with the principles I mentioned. Now, we are not just providing short-term or immediate relief. We are also paving the way for economic recovery in Hong Kong. Now, well, if there is another item, it does not cost much, just about $40 million, but it will give hope to the publishing industry. We hope to do the book fair again. Usually, the book fair will be in July and August, but with the evolving epidemic, we cannot say for sure that there will be a book fair in July or August. But when the book fair is staged, then we will be using $40 million, so most publishers will be able to join the book fair for free. And that's actually a suggestion made by the publishing industry to us in the past week. So that's why I said that when we are out of this epidemic, then we could have a relaunch, and whatever we can do now to pave the way for that, we are more than happy to do so. Sorry, speaker's not coming through. Sorry, speaker's not using microphone.
Sorry. They will be penalized. The details will be announced later.
Next question, please. The front row to the left. I'm from Hong Kong One, Chief Executive. Can I ask about the Employment Support Scheme, ESS? You said you would ask employers to undertake not to make staff redundant, but this is only during this period when they receive subsidy. What if they do actually close down the business or they lay off staff? Is there a way for you to pursue them? And also many businesses are already losing money. Now, when they get the money, they then close down the business and they use that money as severance pay. And then could you also do something about that? Another question is about the pay cut. Now, in the draft estimates, there will be an increase of pay by 10%. So are you going to increase your pay by 10% before you have the 10% pay cut, or are you going to have a pay cut at this level? Now, in private companies, senior management is also taking a pay cut of 30%. So do you think 10% is enough for you to ride out the storm together with the public? And so what would you say to that? Well, the Secretary for Labour and Welfare will be more familiar with severance pay issues, so I'll answer the other questions. First of all, let me clarify that for the 2020-21 estimates, that's just to make provisions for the expenditure of each department. For the Chief Executive's office, in that expenditure head, there is this arrangement. And in fact, in the expenditure heads of other bureau, we have the same arrangement. That is, we need to include the personal emoluments for the next 12 months in that draft estimates. It doesn't actually mean that there will be a pay rise. It's not the case at all. It's just that with this mechanism, there is a mechanism to review the pay of principal officials, and it's done every year on the 1st of July. So in line with that mechanism, we go by the Consumer Price Index A, Category C rather, to decide on the adjustment level. But it's not 10%. I think it's just about 2% at most as CPIC. I think you could work it out yourself easily. Let's say $400,000 of wage, so 10% would be $40,000 pay rise. But no, I'm not getting that much in pay rise. Now, I know you're very interested in the emoluments of remuneration of principal officials, but really you have to focus on the facts. For LegCo members and ExCo members, they follow the same mechanism. District councillors also is the same mechanism. And all these remuneration must be approved by the Legislative Council. There's no need for the Legislative Council to approve that. It's not like civil service pay adjustment. It has to be approved by the Legislative Council. But rather, it's an automatic adjustment mechanism based on CPI, well, A, B, or C, or whatever. If I recall correctly, for LegCo, they get a pay adjustment every 1st of October. And I believe the pay rise level would be similar to that for principal officials. So for LegCo members, ExCo members, and whoever, if they want to ride out the storm together with the public, they want to make certain decisions, I would fully respect that. Thank you. Dr. Law. Thank you, Chief Executive. Let me explain the purpose of the scheme is that we would not give any incentive to employers to reduce wage or to lay off staff, because then they will get less subsidy. Or in future, if they lay off staff or they cut the pay of staff, again, we will have to pursue them for the difference in the subsidy they receive. But then you may ask, what if they take the subsidy or if they've already laid off staff. So with the amount we're giving, we actually encourage them to hire back their employees. And in future, when we do the audit, we'll be looking at the books. So with the current design of the scheme, it will actually encourage employers not to lay off staff, not to cut their pay, or even to hire back some staff. Last two questions. To the far end on the right, the gentleman in black. Mrs. Lam, I'm from Now TV. I'd like to ask about your pay cut. Or you said you've been discussing it all along. But recently there's an announcement on pay increase. Do you think you're not being politically sensitive enough? And how do you come to decide to have a pay cut for 1 year? Is it that after 1 year you may have a pay rise covering 2 years? And for wage subsidy, why is it 50%? Because many labor unions asked for 100% subsidy or at least 70 or 80% subsidy. Well, how did you arrive at the 50% level? Is there any scientific basis for that? And then for the self-employed, say those who work part-time in the catering industry or for those in the beauty care industry, maybe they get paid by a check or cash and they won't be covered. Is that the case? Now, first of all, the government has never made an announcement to have any pay rise or whatever. Let me explain it again. Every year, the government has to prepare the annual estimates. So for each policy bureau or department, we have to apply for expenditure on personal emoluments for the coming 12 months. And for the 12 months personal emolument, of course, we have to consider what the remuneration is for, say, principal officials at the moment, and then we are able to work out what's needed for 12 months. Now, for the remuneration of the chief executive is on the basis of the level approved on the 1st of July in accordance with the pay adjustment mechanism. But then every year when we get to the special finance committee meetings, well, as Dr. Lodge Kwong said, or Mr. Josh, or Mr. Joshua Law said, every year the same questions are repeated, and then people would then compare the reply and say, you have $150,000 more, Chief Executive. But I only found out at that time, but it's actually a pay increase proposal as such. As I said, it's exactly the same arrangement for LegCo. The LegCo's expenditure head is also to take into account the current remuneration honorarium of LegCo members on the basis of CPI adjustment. It's the same for EXCO members as well. So it's not that we're asking for a pay rise at this moment. Now, for the ESS, how come we are capping it at 50% of the median wage? Well, we have the latest figure of the median wage for Hong Kong, that's $18,000. And now we're capping the subsidy at 50%. First, if the subsidy is too small, it's not going to help employers to keep jobs. And secondly, if we do too much, say we pay the full 100%, we can't afford it. Now we're talking about 50% for 6 months, and then the wage limit is $18,000 already. This costs us $80 billion. So in deciding on the percentage, we have to consider the financial burden on public finances. Just now, there were questions asked of the Financial Secretary whether we could afford it and what would the credit rating agencies think of such measures and so on. So there's not exactly a scientific way, but as I said, we've compared the practices of other governments, and we believe what we're doing now is rather more reasonable and liberal in a way, because we're not targeting any particular industries. But for the hard-hit sectors, there will be additional subsidies. Of course, in designing any scheme, it's not possible for it to be fail-proof. There are over 3.7 million employees in Hong Kong. I can't say that we have covered all of them, but we have tried our very best. under the NPF, there are 1.5 million people. For self-employed under NPF, 200,000. And then for the other free-hearted sectors, there are other ways to subsidize the wage. There are 800,000 covered. And then for those employed, by the government or statutory bodies, 400,000. So already is a large number. And then you mentioned those who work on a part-time basis, for example, a sports coach. He doesn't contribute to the NPF. He's a freelancer, but he goes to work as a coach in a school and outside school. Maybe he teaches badminton classes, table tennis classes, or whatever. So in the second round of the anti-epidemic fund, we are giving assistance to people like that. If you're interested, you can take a look at this. And there's more than one item here. We are talking about all services related to schools, because there is a long class suspension. We don't know when classes may resume, even at this point. So there are many people whose income is related to school, so they are affected to varying degrees. And so we are taking a microscopic view, really. We are trying to see which suppliers related to schools are affected, and that's why there is this item in the new round of anti-epidemic fund that is for the tuck shops of schools, operators of canteens, and so on. They will get $80,000 one-off subsidy, because in the last round they were left out indeed, and so we are now trying to cover them as well this time round. And then for meal box suppliers, they may be supplied to schools as well, so they get a $10,000 subsidy. Of course, these supplies may also supply to other places, because people can't go out to eat now. And then there will be subsidy for school bus drivers and carers on this any buses. And so for the drivers and those taking bus attendants, they will get $10,000 each. And then there are others doing freelance work. Say they work at sports coach, then they will each get $7,500. So for subsidy to coaches or other teachers, say leading interest class and so on, they will all get this subsidy. Or if they belong to, or they are registered sports coaches under national sports associations, they will also get the $7,500. It's just a small subsidy for them. Thank you.
Last question, the lady at the back on the left-hand side, Mrs. Lam. I'm from Mingpao. Now for the penalty, punitive system. Now, will employers be penalized if they ask their staff to go on no pay leave or to lay them off? So will the wage subsidies be given on the basis of the previous payroll or the current payroll? Now, you refer to freelancers, but not all freelancers work for schools. Now, for this batch of freelancers, will they be eligible for other subsidy? For instance, in the budget, $10,000 is proposed for everyone over 18 years old. Can you raise that level of subsidy? Now, in Macau, employees can apply for subsidy for payment of their salary taxes. Why can't we do the same in Hong Kong? And for the Anti-Epidemic Fund 2.0, when will you submit it to the Council for approval? Alpha and then FS or Dr. Logicon can refer to the enhanced measures. Now, an Anti-Epidemic Fund 2.0 will have to include ESS. Last time we sought $30 billion. This time it will be over $100 billion. We wanted to go to FC in 2 days' time, but then the whole package is very complicated and lengthy, and Easter holidays is just around the corner. So we hope that we can do it on the 17th of April, next Friday. There were already FC meetings scheduled for both the morning and the afternoon, where we'll try to discuss with the chairman of FC, Mr. Chan Kim Po, to see whether a special FC session can be given to us, just like last time when we submitted the anti-epidemic fund first round. We appeal to legislators to pass the fund as soon as possible because it is very important to many employers and employees who would like to see such relief given to them ASAP. As regards how other places help employees, I think it differs from countries to countries. For us, only a small portion of our employees have to pay salary tax. And in other places, they have a pay-as-you-go taxation system. In some other places, the employers pay salaries tax for the employees. So in our situation, we'll have to see which approach can give us the broadest coverage. I think the MPF contributions will give us the broadest base and will also enable us to disperse funds to employers through employees through employers. I stress through employers, and the purpose is to keep jobs for employees. FS can talk about the 10,000 cash payout, and then Secretary for Labour and Welfare will talk about the punitive measures. Thank you. Regarding the question by the reporter, now for taxes in our budget, we already said that salaries taxpayers will be given 100% tax concession subject to a ceiling of $20,000. We have about 3 million workers in our workforce, and 1.9 million of them have given us tax returns. So 1.9 million do not have to pay tax, and the remaining 1.1 don't have to pay much. So if we further raise the tax concessions, this is not going to help grassroots or the middle income earners. I think the high income earners will stand to benefit most if I were to do so. And as for the 10,000 cash handout scheme, can I raise the handout amount? Now, we are adopting a multi-pronged approach to relieve the financial burden of the community. For the $10,000 cash out scheme, payout scheme, it already costs us $30 billion. The purpose, $70 billion. The purpose is to stabilize the economy and relieve the hardship of people. So we just announced a package of $130 billion or more. The principle is just the same. We want to support the economy and stabilize employment to avoid a surge in the unemployed, because that would cause a spiraling downward of our economy and employment. Because when there are many unemployed in the community, confidence will be shattered and people will tend not to spend. That will further deal a blow to our economy and then deal a blow to employment as well. So we have to prevent this from happening. A job, behind every job there is a family. There are mouths to feed in a family, and that all costs money. Given the current economic situation, many employees worry for their job security. So whether it be measures in my budget or measures in the AEF, they total about $290 billion. They share the same goal, and that is to stabilize the economy and to keep jobs. Cash payout is immediate, but I think it will be more assuring to everyone if we can keep people's jobs. So both are important. We have to strike a balance. Lastly, because the Secretary for Food and Health has already announced 2 more types of premises that have to close. Sorry. Very simple points. First, there can be 2 punishment. First, a clawback, that is to recover the subsidies already handed out. And second, there will be a discount in the wage subsidies. In other words, if you have lay off workers, or if you do not disperse all the money to your employees according to the terms, we have a clause to claw back the money. Under our MPF system, there are 215,000 so-called self-employed persons, what we usually call freelancers. These people will be given a lump sum subsidy. That will be around $7,500. The Chief Executive have been using MPF as a basis because the statutory contributions are unanimous, and we will also cover also schemes. So you need not worry. Also scheme members will also be covered. Let me chip in a word or two. We just announced that 2 more types of establishments will have to close down. Will have to close. So for employees employed by these 2 types of premises may worry, but they will be covered. Now, there are 11 types of premises covering amusement, game center, massage establishment, and beauty parlors, and they will receive a lump sum subsidy of $100,000. But for beauty parlors and massage establishments, there will be a 3-tier system because there is a big range in the scale of operation. So for beauty parlors and massage parlors, smaller scale operations will receive $30,000, and the biggest one $100,000 and $60,000 for those in between. And for cinemas that are required to close down because their operation cost is high. So for each screen, well, cinemas come in different sizes and different number of curtains or screens. So each screen will receive a subsidy of $100,000 as a lump sum, subject to a cap of $3 million. So these are subsidies or relief to types of premises required to close. Thank you. The press briefing ends here.